Swayam Prabha. Digital India. Educated India.
Hi all, welcome to this session on commodity derivatives and risk management, and today we are going to discuss about different metal contracts traded at London Metal Exchange. So what are the metal and what are the metal derivative contracts traded at London Metal Exchange? A wide gamut of derivative contracts on different base metal, that is your non-ferrous, ferrous, minor and precious metal trade at London Metal Exchange. As you can see, from the non-ferrous category you have copper, tin, lead, zinc, aluminium, nickel, etc. trade, and from the ferrous metal category you have steel, and within the steel you have rebar, steel billets and steel scrap also trade. And from the minor metal category you have cobalt and molybdenum, and from the precious metal category you have platinum and palladium contracts trade. Now with respect to metal and mining operation, different companies operate at different stages or different phases of the production, and their hedging requirement are substantially different depending upon what stage of mining operation or production operation they are functioning. Let's do a small quiz to understand what are the hedging requirement of a company which, or what are the hedging requirement of companies which are operating at different stages of copper mining and copper extraction and copper copper production process. Let's focus on this second point. Let me ask a question to you. Let's say if a company is manufacturing and selling copper concentrate, and if copper price increases, will it benefit or will it lose? Actually this particular company is going to benefit by increase in the copper price, because copper concentrate are nothing but one stage ahead from the copper ore, and they are priced with respect to copper, and this copper concentrate normally contains 20 to 30% of the copper. When copper ore is extracted from the copper mine, copper ores are treated and refined, and the refined product is known as the copper concentrate. So when copper price increases, a company which is mining copper ore and manufacturing copper concentrate will benefit from this price increase. Now let's go to the second company. Let's say a company which uses copper cathode to manufacture and sell copper tubes. What would be its profit or loss if the copper price increases? Will it gain or will it lose? The answer is this particular company is going to lose if the copper price increases, because it will be buying copper at a higher rate, and if it is not able to commensurately pass on this profit, commensurately pass on this price increase to customer, its profit is going to take a hit. So when copper price increases, a copper cathode buyer and a copper tube manufacturing company will incur loss. Now let's go to a third kind of a company. Let's say a company which is involved only in smelting and refining of copper, what would be its profit or loss if copper price increases? In fact, the answer will be neither, because this kind of a company only get treatment charges and refining charges, which is known as TCRC charges in the copper industry. They earn per tonnage of copper they treat and refine. So irrespective of whatever may be the copper price, their profit does not increase or does not go down with the movement of the copper prices. So what we are leading at, or what we are discussing, is that depending upon what kind of a value chain or what kind of production process or which phase of production process a company is operating, the price increase or decrease is going to affect those companies in a different manner. So hedging requirement of this company operating at different stages of the production cycle will vary with the change in the copper prices. Now let us go to little bit of discussion on London Metal Exchange. It is one of the oldest exchange. It started formally in 1877, and this is one of the oldest exchange. Still it continues its operation, and it is one of the largest exchange with respect to all metals we discussed a couple of minutes back. Now just I'll just take you through how this particular exchange has emerged since. I hope you are able to see this. This introduction of copper and tin contract, futures and option contract on tin, started in the year 1877, and different other contracts have been introduced in different year. I am not going into this detail. And another interesting aspect is that London Metal Exchange was acquired by Hong Kong Exchange in 2012. So this is little bit about history of London Metal Exchange, and this London Metal Exchange almost came to a closure with the International Tin Council failure. Basically this failure was so severe that the whole future of London Metal Exchange came to a standstill. And at that point of time, in fact till 1985, this London Metal Exchange did not have a clearing house. If you recall, in some of the earlier session we discussed the role of clearing house in a commodity exchange or commodity derivative exchange. Clearing house provide a very important function which is known as your novation. In novation, the clearing house takes the counterparty to each and every trade and guarantees each and every trade which gets executed in the exchange platform. So if a counterparty defaults, the settlement guarantee fund of the exchange is supposed to take care of this counterparty default, so that the one side of the, even if one side of the counterparty one counterparty defaults, the other side is not negatively affected. However, till 1985 London Metal Exchange did not have a this clearing house associated with it. Post 1985, this International Tin Council, the London Metal Exchange created a clearing house. Now the importance of London Metal Exchange can be judged from the fact that LME prices are used as reference price for spot transactions by almost all metal producing companies in the world. So if a company is buying and selling copper or aluminum or steel or tin or zinc, any metal they are buying and selling, they price their output, or when they are buying, they price their input with respect to LME price. And London Metal Exchange is also known as a market of last resort, as traders can take and give physical delivery of the metal. Also, another interesting aspect of this London Metal Exchange, which is not which is not applicable to other commodity derivative exchange. Commodity derivative exchange normally do not provide spot trading facility. So, however, in case of a London Metal Exchange also has a facility for spot trading. So, producers of metal, consumers, buyers, sellers of metal can go to the LME platform and take delivery of the underlying metal or give delivery of the underlying metal. So, this market, that is why London Metal Exchange is also known as a market of last resort for all kinds of metal producers and metal consumers and traders. In fact, to facilitate the spot trading, there are around 600 warehouses which are registered with LME. So, there are all over world at different places there are LME registered warehouses which from these warehouses buyers can buy LME approved metal contracts, as well as they can deliver the metal which if a seller intends to sell. I hope you are able to see this particular Excel file. Let me just increase the font size. So, if you see this one, this particular Excel size shows the different warehouse location which are approved by London Metal Exchange. You have in the country, these are your different commodity warehouses, and in Germany you have Italy, you have Japan, you have South Korea, you have Malaysia, you have Netherlands, you have Singapore, Spain, Sweden, Taiwan, and so on and so forth. So, I am not going into this detail. And also another interesting aspect is that this LME also informs us, if you see this one, this is the, this column shows the rates per ton per US, this is your rate per ton per US dollar per day in US cents. So, if a particular buyer or if a particular trader wants to store aluminum for aluminum alloy for 1 day, and for 1 ton this particular company has to pay 56 cents as warehouse charges. And besides besides making availability of this warehouse information in with respect to the rental charged by the warehouse, LME also on a daily basis informs all all traders or all participants what is the total availability of a particular commodity at each of these warehouse. So, this is a very important information with respect to inventory label, and based on this inventory label, buyers and sellers will be able to know what is the supply demand pattern for a particular commodity at a given point of time. Let us say like this is just a typical example for daily warehouse detail for copper. So, LME will inform warehouse A in Spain what is the opening stock on given day, how many what is the stock in, what is the stock out, or that is the what is the change in the stock change, and what is the ending balance. Like let us say in the warehouse B, so you have 10,125 tons of copper was there, stock in is 500, stock out is 700, net change is minus 200, and this is the ending balance. So, with this kind of information, when this kind of information is made available to all participants, they come to know what is the supply demand for a particular commodity, metal commodity at a given point of time, and it makes them it helps them in taking pricing decision. Now, let us go to understand little bit on trading system at LME. So, this is one of the oldest commodity exchange, as I mentioned, and it operates 3 types of trading platform. One is the ring, it is open outcry method of trading happens. I'm sure some of the old videos you must have seen where people used to congregate and make some hand gestures etc. to buy and sell. So the ring open outcry system of LME still undertakes those kind of a buying selling. The traders or trading members go to the exchange ring and physically interact with each other to undertake tradings. We will go and next couple of minutes we will discuss little bit more about this ring trading system, because this is very unique to LME and no other commodity exchange in the world has is offering this kind of a trading system as of today. All exchanges have graduated to electronic order matching, that is buyers and sellers sitting at different corners of the world are able to place their order, and order matching is done through electronically. Besides the ring, LME also offers electronic trading platform which is known as LME Select, and it also offers trading system through telephone system which is known as a inter-office trading system through telephone, and this operates 24 hours a day. Now let's go to little bit of more on the ring. Now this is, if you can see, this is the London Metal Exchange unveils new ring. If it is, I'm sure you are able to see this. This is this particular report has been downloaded from the LME website. This is as late as 18 February 2016. This picture shows this is the ring. If you can see, this is the circular this red leather chairs are the ring, and if you can see, there are some people who are sitting with papers in their hand, and these are the trading members. Basically in stock exchange parlance, these are your brokers. So these trading members or brokers collate the buy and sell orders and take it to the exchange, and they physically interact and arrive at the prices in which orders are matched. So more about the ring trading and how order execution happens, this is available at the LME website. You can, this particular document which is freely downloadable, you can download and read it. And as you can see, this is the rate fund. The ring has provided a transparent and robust price discovery process for the global metal industry for 139 years. So this is a latest report which was published by London Metal Exchange. And it's also another quote unquote from the LME website. This is the ring. The ring, our open outcry trading floor, is central to the process of price discovery. Now, how exactly the ring trading happens? Throughout the day, there is a like in India, you have BSE, NSE starting from 9 o'clock onwards, and trading is going till 3:45. Similarly, the ring also has some opening time and the closing time, and this total trading time is divided into 4 ring sessions. And in each ring session, each metal is earmarked for 5 minutes, and buyer, sellers, or the trading members interact with each other to buy and sell sell that commodity during that 5 minutes. And there is also a specific time earmarked which is called a curve trading, and in this curve trading all metals are traded simultaneously. So any buyer or any seller or any trader has to buy or sell something during that curve trading time. They can buy and sell each and every commodity. Now let's go to, I hope this is visible to you. If you can see, this is your ring trading starts at 11 a.m. to 5 p.m. 11:40 a.m. to 5 p.m. in London time, and if you can see if you can focus on this particular screen now, if you see this one, this is the first session. The steel billets trade from 1140 to 1145, aluminum alloy trades from 1145 to 1150, so on and so forth. And if you have buy, if you see the first ring trade ends by 1225, and there is an interval from 1225 to 1230, and the second ring starts from, again copper start getting traded from 1230 to 1235. I want all of you to focus this particular time. Copper in the second ring trades from 12 to 1235. In the first ring, copper traded at 12 to 12:05 noon, and in the second ring copper traded from 12:30 to 12:35, and at the end of the ring session 2 you have a curve trading. Please note that one. Curve trading is for 20 minutes, that is your 13:25 to 14:45 minutes. Similarly, you have afternoon session is again divided into 2 ring sessions. So you have aluminum alloy and other commodities like lead, zinc, etc. is trading, and again you have an interval of between 1535, that is 335 to 340, and again there is a curve trading at the end of the 4th ring, that is from 4:15 to 5 p.m. So 4:15 to, so almost 45 minutes you have earmarked for curve trading, and this is so this is all about the ring trading session at LME. And at the end of each of these ring trading session, the LME informs what is the price, and these prices are known as, LME informs 3 sets of price on a daily basis, that is official price, unofficial price and closing price. So let me take you through how does this official price look like. Please see this one. If you can see this particular table, this is the official price as announced by LME as on 1st July 2016. So you have aluminum official price is this, aluminum alloy, copper, etc. These are the official price. Besides this official price, LME also provides something called an unofficial price and closing price. So what are these unofficial price and closing price? So official price arrived at the at the end of the second ring session. So if you recall, copper was trading around 12:30 to 12:35. So the price arrived at during this session for copper will be known as the official price. In fact, it is the last offer price for the cash and spot position. So during this 5 minutes, buyers and sellers not only trade futures and options, they also trade spot positions. So the last offer price, all of you know that whenever buyers are bidding, they give a buy price, and whenever sellers are giving their interest, the price interest, that is known as your offer price or ask price. So the last offer price for the spot trading for the copper at the second ring session is known as the official price. Similarly, what is the unofficial price? Unofficial price is the offer price for the spot trading, which for a commodity during the 4th ring session. So in the afternoon, in the second session, that is the 4th ring session, what is the offer price? Last offer price came from a seller before that 5 minute, during that 5 minute slot. So that will be known as your unofficial price. And what is the closing price? Closing price is arrived during the second curve trading session. So let me take you to the Okay. If you remember, this is the curve trading starts from that is 4:15 to it ends up at 5 o'clock, and during the curve trading, aluminium suggests trading at 4:30, tin suggests trading at 4:35. So the last offer price for the spot trading, which was which came during this period of time, that is before 16:35, that becomes the spot price for tin contract, that is the closing price for the tin contract that day. Let me summarize what I just mentioned. So let me summarize what I just mentioned. LME publishes on official price, unofficial price and closing price, and why so many prices are informed by the or made available by the LME, not the last price only. Okay, the answer to this particular question is that LME price is used to price the spot trading or spot transactions by many companies all over the world. So depending upon what is their working hour and what is the working time for those companies, LME makes available 3 different prices. So depending upon whichever price is suitable, a company uses that price as a reference price for its spot transactions, buying and selling commodity in physical market. As I mentioned, you have, if you see official price discovery mechanism at LME, copper trades at 12:30, copper closes at ring closes for copper, ring closes at 12:35. Official price, which is a provisional official price, gets announced by the quotation committee. LME has a quotation committee which announces provisional offer price, and that offer price is made available to all trading member, and in case there is a discrepancy, they get in touch with the quotation committee, and once the discrepancy is resolved, official price gets, if you can see, this official price gets announced to the market whole world by 12:45. So whole by 12:45 p.m. All the exchange officially informs what is the copper price for the second ring session. Also, besides this official unofficial price, LME also informs or publishes LME Asian benchmark price. So what is this LME benchmark price? Asian benchmark price is that it is the weighted average, volume weighted average price of transactions in the LME Select, that is your electronic market. As you recall, LME offers 3 different kinds of trading system: ring trading as well as LME trading, which is your electronic platform. So volume weighted average price is calculated, and that is informed to the in the general market, and the all trades which have been executed by during 6:55 to 7 p.m. GMT, during that period of time, whatever trades has been executed, that volume weighted average price is informed to the market as a ASEAN reference price, and these prices which are discovered and published coincide with the end of the Asian trading day. So subsequently, if any company wants to price its product for buying and selling, they can use this LME ASEAN benchmark price to price their products. Now, commodity contracts at LME, as I mentioned, any exchange has definitely futures options contract. You also have at LME, you also have companies can buy and sell physical commodities. So this cash trading at LME is can be done, and it is done through T+2 settlement, that is trading day, and buyers and sellers will be giving money and sellers will be giving warehouse receipts to the LME within T+2 date, and for the spot transaction. And in LME parlance, the warehouse receipts are known as warrants. All along we were using the word warehouse receipts, but at LME these warehouse receipts are known as warrants, and these warrants are gets recorded or gets transacted from the seller's account to the buyer's account in a demat account, and that demat account is known as LME sold. So how these words have come, I am not very clear, but this demat account is known as LME sold, and the warehouse receipts are known as your warrants. And derivative contracts, which derivative contracts trade at LME? There are quite a few derivative contracts trade at LME, futures, options, and traded average price swap options and swaps, etc. So we will be continuing with discussion on these contracts in our next session. So thank you all of you, and again looking forward to the next session, which is going to be the last session for this particular subject.